Welcome back. You're watching IndianOpen right here on BloombergQuint Live. A quick glance across Asian markets. SGX Nifty is absolutely flat. Nothing much is happening there. And that's on the back of what's been happening in the rest of Asia too, which is trading with no major moves. Shanghai is marginally lower and so is Hong Kong. Japan is marginally higher, but no key takeaways from that market. Aside from the fact that you've got a sudden spike in new cases for coronavirus, as well as the death toll has gone up beyond 1,300, that could wane on sentiment across asset classes. Whether or not this is something that is contrary to what we've been hearing so far, which is that it could be a peak of the coronavirus by the end of this month. That could actually be something that's, contrary to what we're getting in terms of numbers. Yeah, yesterday even the US markets, the casino stocks, the airline stocks, all of them went up because there was a Merrill Lynch report which said that the cases are peaking out, and then we have this release as a result of which I think the S&P futures too have taken a bit of a backseat. Though, the equity markets so far are doing okay for themselves. Our markets as well. Last 2 days, you've seen the FIs increasing their long positions. In fact, let's get it to Navneet to talk about that as to what's been happening in terms of the setup in the futures and options segment. It's the F&O options expiry, weekly options expiry today as well. Navneet, good morning.
Good morning to both of you. Well, the Nifty has been making higher highs, higher lows for the last 2 sessions, and we've seen that it's been a strong rebound, at least for the frontline indices. So yesterday we also reclaimed the 12,200 mark in trade, and but it was a short covering bounce. Now, last 2 days bounce on Nifty has been on account of short covering, and the premium also expanded to about 27 points. For Nifty Bank, which did cross that crucial mark of 31,500 in yesterday's trade, but it's failing to close above that mark. Remember, 31,500 has been a resistance for Nifty Bank, and now, by the way, Nifty Bank has been trading around its 50-day moving average. No major positions were seen there as well. India Wix continues to fall. In fact, in the last 2 weeks, we've seen India Wix coming off from those levels of 17, 18 to now 13.6, and it's a good sign for the bulls if the markets were to scale higher even from the current levels. Very quickly then, on the option side, you had the Nifty PCR moving higher to levels of 1.6 versus previous closing of 1.38 on account of higher put writing which came back into the system. For today's expiry, by the way, in terms of distribution, you've got the maximum open interest now on the call side at 12,300, while on the put side it is divided between 12,100 and 200. What happened yesterday, as I mentioned, there was a lot of put writing. The call writers, by the way, ran for cover once the Nifty crossed the mark of 12,200. So there you go, 12,100 and 200 call strikes witnessed unwinding in trade, while there was aggressive put writing which came into the mark of 12,200 strike. The range, I feel, will be 12,150 will be the first support for the index today, and 12,250 will be the first hurdle that the Nifty will have to cross. Moving on, in terms of individual stock futures, you had Godrej Consumer, which has been a laggard in its space, rallied about 4%. Long positions were seen there as well. Kotak gave good support to Nifty yesterday. Long positions were seen here as well. Siemens, however, has been falling post its numbers. Shorting was seen on this counter, and Bpcl has been trading at its 52-week lows, and shorting was seen here as well. In terms of FI data, we've seen unwinding of short positions for the last 2 days. There you go, almost 11,000 contracts were unwound, and some signs of long came in. I just want to highlight, I think a week back the ratio was 15% long. That's moved up to 23%, giving you an indication maybe at lower levels FIs have started to create long positions. For the index options data, I think positive cues because they've added call long as well as put shots as well. With that, it's back to you guys.
All right, Navneet, thanks very much for that. Parthiv Shah, director at TRACOM Stockbrokers, is joining us right now on the show. Parthiv, thanks very much for taking out the time, and good morning to you. Let's talk about the overall mood of the market as well as a few key results. Today, obviously, you're going to be watching out for Bpcl, you're going to watch out for Nestle. But within the broader market space, are the results exciting you? I mean, and to start off with Irctc, which we just spoke about, stellar set of numbers. But somehow it was almost a given because the management and the new rules suggested that the convenience charge would kick in from 1st of September, which would show up in the quarterly results.
Good morning, Devina. Yes, absolutely, Devina. In case of Irctc, certainly the case of the convenience charge made a huge difference in terms of its entire revenue model. And we know for the fact that in the e-ticketing systems, the convenience charge adds a lot of EBITDA margins to this company. And also, I think it's a cash flow which I think cannot be missed out. And now what most of the analysts are penciling in is that this is a company, despite this massive run-up that we have seen to the levels of almost 1400, 1500, has this huge potential. And even right now, it's quoting at around a market cap of around 22,000, 23,000, wherein I think what happens is that with such numbers, and we know that year on year, these optically numbers are going to look good because year on year back, there wasn't this convenience charge. And the volume of e-ticketing is certainly going up. So despite the fact that the catering business was slightly tepid, the rail need business was slightly tepid, I think certainly this segment propels the entire valuation re-rating of this company. And I think they're doing some capital allocation in low budget hotel. So I think that is something interesting, but we don't know how the numbers will pan out going ahead. But again, I think this is still the story of this e-ticketing business model, wherein with the convenience fees, I think one is penciling in anywhere around 200 crores of PAT for next year. So I think this is a story where one should really not miss out. I still believe, despite the run-up, even from here, it's quoting at around 24 times, which for such an e-commerce centric sort of a business model might not be necessarily very expensive. So we are bullish on this story even at this juncture.
Okay.
The question that one could only have is that if you look at the IRCTC numbers and look at the 9-month numbers as well, the bottom line numbers have expanded and expanded quite meaningfully. So with that in mind and the expectations of what they would do for FY20, the stock would be trading at what, 40, 45 times current year, FY20 earnings. Is that expensive? Or is that reasonable considering the business model and the expected operating leverage?
So I think Parthiv was talking about FY21 when he said about 27 times, 24, 27 times, which is still cheap for
that's the limited
internet,
point.
Yeah.
So, you know, in Parthiv, that's the limited point, right? So one is whether the results justify the valuations. Two, because of the uptick in earnings expected, should people shy away from buying this business because it's a monopoly, because there is operating leverage at play? And because there is a big moat that it has, right? I mean, the fact that there is arguably not going to be any other player which is likely to come in, at least for the foreseeable future. And that's a very strong moat to have.
And also, Neeraj, I'll add to the fact that the tax cuts have also been helpful. Now, this is a company which is paying 25% tax versus 34%. So that is like a perpetual gain in terms of adding valuation to this company. But yes, you very rightly pointed out the moat. In the e-ticketing business, there is no other company which can come into this space. And we know that the volumes are growing year on year. And with the convenience fees inculcated, I think that's going to really deliver a lot of operating leverage. So I think the case of valuations in this particular market, we know a lot of companies defy valuations. Trust me, this being a public sector enterprise is still quoting at 27 times FY21. Imagine had it been like owned by likes of the promoters of DMart, what sort of valuations this would have gotten. But any which ways case, I think this is still a good bet, I believe. And with the moat that you just mentioned, I believe long way to go for this company.
All right, that's IRCTC. And remember, nonetheless, even the return ratios are exceptional. I mean, 35% plus, ROE, ROC. You've got everything working, all engines kicking for this one. What's not kicking in is, Yes Bank and the issues that keep picking up out there. Now another month extension to, their result announcements from 14th Feb to 14th March. They're looking at new investors. Obviously, that's also on approvals with some clarifications required from authorities. The stocks at 35 and HSB and brokerages are not really gung-ho on the stock either. I think you've got a target price of 25 been put out by one of the other brokerages as well. But Parthiv, a quick take on Yes Bank now.
This is what we've been talking about every time we discuss on Yes Bank. It's a case of entirely the credibility is lost. They've been talking about this $2 billion, $1.2 billion binding agreement, money being, they were getting the money and all that. But I think it's just been talks. And unless and until the market sees that capital coming into the bank, I think it's going to be a huge trust deficit so far. So our point is simple. I think just avoid this count at this juncture.
Okay, that's Yes Bank for you. Could see further downside coming in on the counter at 35 in yesterday's session, was down about 4.5%. One quick word on one outperformer since the last few days, which has been GAIL, Parthiv. You're tracking this one, and what works for this counter in terms of making fresh investments?
See, I think in terms of fresh investments, Devina, to be very honest, I've been little wary, despite the fact that GAIL is a market leader in terms of the gas pipeline, having almost 76% market share. And of late, even the petrochem business, it's been relatively stable. But I think what tends to happen is these companies deliver good set of numbers for a particular quarter, and then all of a sudden we see the numbers looking optically very bad. And despite the fact that the marketing margins have held up stable for GAIL, we are not really very bullish, and it has like kind of rallied from its lows. But despite the attractive valuations, this is not a type of company you would like to have in investment portfolio.
Okay. Stay on with us, Parthiv. Lots more to talk to you about. In the meantime, let me just go across to our research team to give us a quick snapshot of some of the other results that came out post-market as and how they're likely to bear down on the stock price movements as we kickstart trade today. And also Bpcl that reports its numbers today. Nikki, I'm going to start off with you first on some of the results that came out.
Sure, most of them are dismal set of numbers. So Ashok Leyland first, where the numbers are below estimates. Top line, we're looking at a 36.5% downtick. Profitability has taken a hit, 92% down. That comes on disappointing operational show, which is down by 65.3%. Raw material cost as a percentage of sales, that number has also increased, which in turn has hit the margin performance. But essentially, it's the higher discounting and the inventory correction, which is weighed on the margin performance of the company. Dish TV, another disappointing set of numbers, where the top line growth also has taken a hit, a 43% downtick there. The company has reported a net loss of 64 crore as compared to a profitable figure of more than 150 crore in the corresponding quarter. But however, if you look at the operational performance, that is little muted, not that disappointing, because operational expenses to an extent which have declined by 77%, they've weighted the operational performance. But overall, margins have expanded on Ind AS impact. Suntech Realty, another muted set of number reported by this company as well. Revenue, it's flattish. Net profitability, however, has taken a hit of more than 24%. And EBITDA, that number has come down by 41%. Pre-sales growth, however, has risen by 5%. PI industry is the only one which is exceptional here, which has reported a relatively steady set of numbers. Revenue up by 20%, net profitability up by 10%, more than a 10% uptick. And a strong operational show, which comes on back of both strong performance in domestic as well as exports. Two construction companies that we're looking at, PNC Infra, where the company has been declared as an L1 bidder for a HAM project in Uttar Pradesh for a cost of around more than 2,000 odd crore. KNR Constructions, a positive development, not sure if the stock would react. The company has received an appointed date by the Karnataka government for EPC project. And last in the list, we are looking at Chalet Hotels, where the company is now being deleted from MSCI Index, domestic small cap index overall. So keep an eye out on this one as well.
Okay, got that. BPCL, what's expected?
Yeah, so 10% top line growth is something that we are seeing. On the bottom line, there will be a decline of almost 23%. On the EBITDA front, a 14% increase. As far as the GRMs are concerned, we are seeing a bit of improvement in the GRM, coming in at 3.48% versus 3.38% last time around. Inventory gains are expected this time around, and that could make up for the weak performance on the marketing margins and the refining margins. So we are anticipating anywhere between 200 to 400 crores that will come in terms of the inventory gains, compared to a loss last time around. And there is a forex a loss of 130 to 150 crores probably, which could also impact the financials of the companies. The Singapore GRMs actually averaged close to $1.7 per barrel. What do you watch out for? I think more clarity will be needed in terms of the debt and pending subsidy dues from the government, refining and marketing margin outlook for the company, and finally, what's the status of the Kochi Petchem project?
All right, guys, thanks very much for joining in with that. So watch out for all of those names that we just discussed. What did you make out of PI Industries results, Parthiv, and also any other company within this pocket that you've liked, also on the back of what's been happening globally and in China?
In terms of PI Industries, I think fantastic set of numbers, and this is a company which has distinguished itself in terms of its agrochemical business model, where they do a lot of molecule-related research for a lot of MNC companies through its custom synthesis business, where the order book is extremely healthy. And our sense is that this is a company which could take a lot of advantage of the current troubles in China in terms of the coronavirus, where a lot of companies out there which is into the custom synthesis business might struggle to to deliver timely molecules to its customers. So the inquiries and all have gone up. And what we find very interesting is that PA Industries did make a decent size acquisition, and now they are on the verge of raising more funds to the tune of 2,000 crores for, I think, further inorganic opportunities. So I think the capital allocation strategy of this company has been tremendous. Return ratios are fantastic. No doubt, I think the valuations optically look a little expensive, but I think long way to go for such companies to garner more market share. And in the similar segment, I think we had discussed Sumitomo Chemicals a couple of weeks back, and the stock has had a decent run up. Valuations are slightly pricey, and probably we are looking at the results today. So I think these are the type of companies which are real innovators in terms of molecules that we would like to own in the agrochemical segment as compared to the generics.
Well, Parthiv, we've spoken a lot about the good numbers. Let's also contrast this with what seemingly underperformed Ashok Leyland. And almost every management that I speak to, which is in the financing business, says that they expect heavy commercial vehicles to recover at the fag end. Everything else will recover before. And these quarters numbers show the problems that are at hand for Ashok Leyland, because what could have been operating leverage is turning out to be a bit of a nightmare for them. EBITDA margins have just collapsed here. What do you do with the stock?
And unfortunately, this comes at the back of stock having a decent rally going into the numbers. And again, I think a lot of excuses. One being the product mix was not very healthy or favorable for the margins. They had to push volumes in the LCV segment. The MHCV, or the heavy commercial, is not doing well, also because of reasons of the fact that post GST, I think the same truck for the fleet operator is being lot more efficient. Another reason or worry being about the fact the transition to Bharat Stage 6, and now I think everyone is penciling in that the volume numbers or the growth in the heavy commercial segment will not come before, I think, next year. So I think it's a very tough scenario. And this same Ashok Leyland had witnessed operating leverage at a point in time when the volume growth was improving, and now the reverse is taking place, and that's the key reason why the margins have come down. And also, if you see the raw material as a percentage of sales, that has inched up from 70% to almost 74%, which is also not helping the cause of the margins. So very difficult scenario. The only saving grace is that the balance sheet quality is lot better as compared to the previous down cycle. So probably they will have to wait for another 6 months to 12 months till we see any sort of green shoots in terms of recovery.
Okay, Parthiv, stay on. So much more to talk about, but time to get in our derivative experts on board and technical expert on board as well to talk about how to approach trade in a scenario like this. Amit Gupta, Vice President and Head of Derivatives at ICICI Securities, joins us on the show. Amit, good morning. Thanks for joining in. What's your sense? I mean, while the global markets ended well yesterday, the Dow futures have slipped a little bit. We are looking like starting off with a soft footing. How are you approaching trade today?
See, I think what is missing right now in the market is the FII's buying. So market has moved up because they have closed most of the short positions, some of the short positions I would say, because there was a continuous short in the index futures when the market drifted below 12,000 before. But then we have seen the closure of those positions. So overall, what is more noticing right now is the 12,000 put base. Now, if you look at before budget also, this base was relatively higher, almost I think 1.5 times than the rest of the strikes. And then after budget, we saw there was a sudden fall. The people were not prepared, and that's why the fall was a little more. But immediately when the market has moved above 12,000, then I think again that base has formed. And the volatility in the US markets has also declined very fast, and that had moved up, and because of that our volatility also had moved up. So then it was a scenario we were following the walls of US. Now our volatility has also declined. So I think there is a more possibility the market is trying to form a base above 12,000. And considering this, what we can do, possibly 12,200 call and put option we can write. I think still, and that we can write for the next weekly expiry, which is 20th of February. We are still getting a premium of 166, 170 rupees around. So if we do this, and if Nifty just consolidates within plus minus 100 or 140 points of range, then I think you will start making money in this, as the volatility trend is on the decline.
Okay. Amit, what about individual stocks then? What are you recommending this morning in terms of strategies?
So one interesting stock that has come out after a very long period of the last few years is United Spirit. I understand there was a tax increase in cigarettes, so ITC had come down, but we did not see that in the liquor space. And then there was a news of duty-free something. And that is not confirmed yet, but if you look at the volumes in United Spirit, it has been almost 2-year highs. I mean, around 600, 620 levels, the volume setup was equivalent to that. And in 2017, when it happened, we saw the stock moving towards 780 also. So I think it is in a makeup exercise. The declines can still be bought, and the open interest in the long side has started moving up. So still there is room for this open interest to add up, because this is just the bounce from the previous resistance of around, I think, 680, 670. Whenever it was moving, it was facing a lot of hurdle. Then it has closed above this now. So I think considering this increase in OI and the volume setup, it seems the stock is moving towards at least 740 and 780 on the higher side. So we can, go long in this. Now the other stock that we are recommending is the Cholamandalam Finance. It is related to auto, that is why it was not moving that much as per the Muthoot Finance or Manappuram Finance, which were related to gold. But if you look at Cholamandalam Finance recently, almost 45% increase is there in the long positions. The question is why such an increase has suddenly come in, and before this around 305, 310, where for the last 3-4 series it was just spending time, we saw good delivery buying on few occasions. So my sense is possibly the base has already been formed near 305, 310, and now the stock just on this 45% increase may move higher. So I think 365 one can keep the target for it.
Okay, got that. Stay on, Amit. Lots more to talk to you, and get in our Bloomberg Edge segment right now for the time being, where Yash tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock every day. Yash, good morning. What's the stock today?
Morning, Devina. So we are looking at Jyoti Labs, and after a series of downtakes, the stochastics indicator suggests that maybe this move may have been overextended, and we could see a potential reversal from these current levels. But like we always do, let's first try and understand what the stochastics indicator is and how do you interpret it. The stochastics is basically a momentum indicator, and it helps you identify when a price move is overextended by measuring its price relative to its current highs and lows. How do you interpret it? Any crossover is an indication of a buy or a sell. Overbought is above the mark of 80 and oversold is below the mark of 20. Coming back to the price chart of Jyoti Labs, and it has been under severe pressure over the last several trading sessions. In fact, it has been falling for at least the last 6 consecutive trading days. But the stochastics indicator that suggests that we could see a potential reversal, because we have seen the fast stochastics line cross above the slow stochastics line, and that too has happened below the mark of 20. So this is an early buy indication that we could see slowly the momentum of the loss to reduce, and then we should start seeing an up move. Additionally, on the weekly time frame, the stock has taken support at a price where it has traditionally seen a strong support. So take a look at this yellow dotted line, and this is around the mark of 140. Every time that the stock has managed to come down to these levels, it has acted as a strong support, and we've seen the bounce come in, and this is over the weekly time frame for the last 4-year period, and 4 times in the recent history when this has happened, it has managed to move up. So both the stochastics indicator as well as these crucial levels suggest that both the risk to reward ratio is also extremely favorable for someone to go long.
Okay. How well has this worked in the past, Yash?
Devina, 6 out of the last 7 times that the stochastics indicator has given a buy signal, the average monthly return on a closing basis has been somewhere around 15%.
Okay, got that. So probably a reversal of a trend for Jyoti Labs. Thanks a lot for that, Yash. Sameet, Chavan, Chief Analyst of Technicals and Derivatives at Angel Broking, is also joining us on the show. Sameet, good morning. Let's talk about the index, the levels that you're watching out for, and what kind of a trade would you initiate?
So good morning. In last couple of days, we have seen good recovery from the low levels of 12,000. So 11,980, 12,000 acted as very strong support. And in last 3-4 days, we have seen Nifty struggling around 12,150, 170, which we managed to surpass yesterday on a closing basis as well. So from here on, this northward trajectory is likely to continue. Some of the marquee names like HUL, had a stellar move yesterday. Kotak Bank rallied well, and we saw some late surge in ICICI Bank and HDFC Bank. So that is likely to drive market higher from current level. So as far as levels are concerned for the day, 12,250, 12,280, these are the levels to watch out for. In case of a soft opening, if we see Nifty 20-25 points lower from yesterday's close, that would be a buying opportunity according to us. One can buy with a stop loss around 12,135, and we would expect Nifty heading towards 12,250, 12,280.
Okay. Stocks, Sameet, quickly, what are you recommending this morning?
We have 3 buy ideas. First one would be Metropolis, which has given a decisive breakout from its recent consolidation along with volumes. So Metropolis can be bought for a target of 1940, stop loss 1775. Other buy would be on Minda Corp, which is gearing up for a strong move on the verge of a breakout. So we are anticipating it to happen. Target 124, stop 112. And third buy would be on Sun TV, which has already given a good move in last 3 to 4 days. So we would expect this move to extend. Target would be around 542, can be bought with a stop loss around 488.
Okay. Well, we've discussed largely some of the numbers that have come out. Parthiv, I just wanted to ask you about United Spirits because as Amit Gupta said that there is a bit of a trend building out there. Yesterday also it was a consensus buy. I wonder if fundamentally at 45, 46, 47 times, USL gives you that comfort to go out and buy that stock.
Absolutely, Neeraj. I think we've been bullish on this counter even when it was quoting below levels of 600. And despite all the negative news that this counter faced, what we like about the fact is that they're constantly working on improving their premiumization product positioning. And that is evident from the fact that every quarter when we hear the management commentary, they always talk about the fact that they're not trying to chase any sort of major volume growth, but they're trying to create new product categories. And again, I think if I compare the margin profile of Diageo with likes of a lot of other MNC plays which are operating in the country, I think I still believe there's a lot of room for United Spirits to improve its margin profile. And I think that is surely looking possible. And I think market leaders tend to get very high multiples. And despite the 45 times multiple that right now it is subscribing to, one will have to give it 3 to 5 years sort of an investment horizon to justify this valuation. But yes, I think this is a very good company to park into a portfolio. And I think it's a market leader in its product categories. And these are the type of companies that we would like to own.
The interesting bit is, if you just look at what the last 2 years of this market move has done, the smaller companies in the liquor space have fallen by the wayside. The Som distilleries and some other Tilak Nagar Industries, etc. All of them have fallen by the wayside. What has done well, or what has stayed steady, is United Spirits, United Breweries, and to an extent Radico Khaitan. So in this space, more than anywhere else, you've seen the survival of the fittest. And therefore, if you want to bet on these on this pocket, then maybe these are the companies to look at. They haven't rallied in the last 2 years at all. Let's see if this is a beginning of some bit of an up move that could come in. The other small pocket, Parthiv, very quickly, that is doing well after the Amphi numbers came out are the asset management companies. Both HDFC and Arnam in particular have really rallied. Now, we've spoken about these a number of times in the past. My question is, at 400, 405, is Nippon Life Asset Management discounting the positives, or would you still buy it?
See, I think I still believe that Nippon Life is quoting at around 25% discount in terms of valuations to HDFC AMC, and this gap will always remain. But still, I believe that Nippon Asset Management has a long way to go in terms of performance, because I think we should understand the fact that the operating leverage for AMCs kick in 2 ways. One is through the new flows, and they have got mandates for a lot of government EPFO flows. Plus, I think the new mandate in the operating leverage also kicks in as and when the market conditions improve, both for debt and equity. So I think it's a great business model, will deserve higher multiples. A lot of free cash flow is generated, which will be doled out in the form of dividends or buybacks. So certainly people holding this or wanting to enter or take a new position in this, certainly go ahead, but give it a 3 to 5 year time frame.
Okay. Amit, a quick word. Which one do you like of the two, HDFC AMC or Nippon Asset? Amit, that was for you.
This is for me?
Yes.
So actually they are not in F&O, so we don't track these stocks actually.
Okay. The other one that's on the index that this week itself has done really well within the metal space is Jsw Steel. It's been up 13% over the last 7 days. Amit, do you track this one, and would you be comfortable taking a long position on it?
See, it is relatively better because if you look at JSW Steel, it is not dependent on, outside like what is happening with Tata Steel right now because of the Europe problem, what we saw just now. The stock has come down. So that is the advantage JSW Steel is taking. And overall, if FII's money flow starts increasing at these levels, because if the coronavirus thing, gets subsided over the period and money flow starts, this has been one of the favorite of FIIs. And once the stock has come down, if you see the recent rollovers in the last 2 or 3 series, I have seen that whatever shorts were formed before, so almost 25% of those positions have been reduced. So it's a very encouraging sign for at the lower levels for JSW Steel. So if at the current levels, I may possibly avoid the stock, but overall it looks very good. On the declines can be bought, possibly can be taken in the portfolios for the long-term bets.
Amit, just stay on. I want to get your view on SBI as well, but that's post pre-open. That's how Asia looks, and SGX is down marginally by about 12 odd points. Let's wait for these prices to come off and cool off by 9:08 to get the firm pre-open ticks. But 12,108 is where the Nifty's first tick is at, so that's down. Sensex is up 151 points. Interesting to see what individual stocks, and particularly Yes Bank, is doing after yesterday's announcement of a delay in its results. So it's up 9-10% in the session. Obviously, the kicker being that they have 4 expression of interests from 4 investors. Quantum of investment still not known. They need to know the limit of how much they can invest and the pricing of the same. But just the fact that there is still more interest probably is something that's keeping the stock active. But again, very nascent. You've just been into the pre-open a few seconds, a minute. Wait for this to come off. Bharti Infratel 4.5% higher. Dr. Reddy's, that's up about 3.8 odd percent. NTPC 1.5% higher. Z's up 1%. Infosys SBI 322. Tata Steel Titan is at 1275. Coal India moves up 180. L&T, M&M and Reliance Industries are trading in the green. What's not in the green is JSW. We were just talking about it, and it looks like you could see some profit taking since the stock has already run up over the last 7 days. Adani Ports, GAIL, Bharti Airtel, Axis Bank, Vedanta TCS, and ITC is down as well. I want to just look at HUL. The big mover from yesterday is trade, about that 5% pop post the Motilal Oswal report, and that's absolutely flat in today's pre-open session. There's some weakness in the currency. 71.39 to the dollar is where the rupee is currently trading at. But I guess it's the mid-cap stocks and the results and the reaction to those results, I guess, Irctc, Ashok Leyland, that matter.
Yes, indeed. Let's see what IRCTC is up to. Well, a big move on open. Let's see if this lasts. But 16% of an uptick. Wow, that's quite stellar, really. Even if it's not 16%, but just the fact that the results would receive a warm response is encouraging. Let's see if these last. Ashok Leyland on the flip side, and let's see if that is correcting post the numbers. 10% lower right now. Let's wait and watch if that is indeed the kind of downtick that comes in for Ashok Leyland. So a couple of names that you got to watch out for as far as results go. PI Industries is the other one that you need to monitor in this session. The numbers were heartening. Let's wait and watch if this lasts about 1.25%. But let's see if the moves continue. That aside, you'll probably have some moves on these MSCI changes. So by the way, large flows are expected in AU Bank, Bandhan Bank, HDFC Life, which hasn't happened. I don't know if these stocks react or no, but the one that could see some reactions likely is Shriram Transport Finance. Some outflows expected, and let's see if indeed HDFC were to react negatively. For now, no, not really. Let's see if this lasts. But the pre-open rates fairly sedate on the large caps, the broader end of the spectrum, really the ones that matter. Sameet, Chavan, before we get to Shefali Malik for the brokerage calls of the day, the stock of the morning has to be IRCTC. We've discussed that enough with the fundamental experts. The question is, what kind of levels does a potential move of anywhere between 5 to 15% open up for IRCTC?
See, clearly this has been, one of the outperformers over the past 1.5 months. Yes, the overall, historical data is not sufficient for me to, analyze this particular counter to say its historical trends. But with current move, stock has already given stellar move from the levels of 950, a minor decline of profit booking toward the support level of 1350, and now if the stock gives such kind of bump up, it would surpass its recent highs of 1550 as well. So it would enter an uncharted territory. So it would be very difficult to project any kind of levels at current level.
Okay, uncharted territories, but I'll just lay out the valuations once again for our viewers who are tuning in. At roughly about 25,000 crores of market cap on an expected basis, IRCTC would be trading at about 41 times FY20 earnings, and nearly 30 times after this up move, about 30 times FY21 earnings. Now, I remember Parthiv Shah's comments that at those levels, 25 to 30 times, it's still not very expensive looking at the moat in the business. So keep that at the back of your mind. We'll probably revisit that, but this is the sum and substance of what is arguably the stock of the day. But what about the brokerage calls for the day? Shefali is joining in with those. Shefali, good morning.
Good morning, Neeraj. So the first one is Nomura and Dr. Reddy's. So after the announcement of acquisition of a portfolio of Walkhard, so they are estimating that particular portfolio to be estimated at about 3.7 times FY20 EV by sales and about 15 times EV by EBITDA. Also, they're saying that the particular portion of Walkhard which is being acquired has been seeing muted growth lately in most of the key brands. In 10 to 15% of the sales in Walkhard's faucet business, that is estimated to be contributed by brands under price control, and they expect this acquisition to be funded by a combination of debt and cash on books. So as of now, they're not factoring in this particular acquisition in their numbers as they await more clarity. So it's a buy as of now with a target of 36.84. Bank of America has come out with a note on Info Edge, and after the Q3 earnings, they are downgrading it to a neutral call as they feel that now it's fairly valued post the recent rally. And however, the target has been raised to 3,035 versus 28.20 earlier, mainly on the back of higher valuation being ascribed to Zomato post the fundraising it did, and also on the back of Uber Eats acquisition. But they've cut the FY21 to 22 EPS estimates by 22% to factor in slower near-term growth. And as far as Zomato and Policy Bazaar is concerned, they are unlikely to re-rate further from here on. So that's BOFA on Info Edge. Morgan Stanley has put out a note on Yes Bank, and they remain unsure of the size, pricing, and the various other details as far as most of the offers that they've got, and they stay underweight on the counter given the uncertainties surrounding the bank, low capital, and the elevated asset quality stress. So they, according to their calculations, there'll be an implied dilution of 40 to 80% if the bank raises $0.5 to $1 billion, if and when it does.
All right, Shefali, thanks very much for that. Amit, I wanted to come to you on SBI. Now, for some time, the stock has been in this range-bound move. You've seen it move beyond 320 on a couple of occasions, but then come right back down. Is there any scope for the stock to make a breakout? Are the positions suggesting anything that says that you could see further upside for SBI?
See, it is sitting high on the short positions. The open interest is at the life highs. So that kind of, short buildup we have seen in SBI. But along with this, what also happened was 340 call strikes were, shorted. So those things are done. The thing is, now stock is near the crucial support levels, because simultaneously when this thing was happening, the 300 put writers were also active. So you can say it was a band of 300 to 340. It has spent a lot of time. The other PSU banks during this period, they have given up. somehow SBI has held this particular range. Now I am giving a lot of weightage to 300 put writers also, because when this selling was there, they have remained intact. And that is why again and again, whenever it has fallen towards 305 or 310, we have seen the reversal. So my sense is, if those levels are held, eventually you can see some short covering in the coming days. So we are looking for, some reversal towards at least 340. And the move above 340 or closing above 340, then you can open the cards for some major short covering trend in SBI. But for the timing, within this range, if it is declining from the lower levels, we can buy and look for a target of 340. That is what we can do right now in this.
Okay, going back to Yes Bank now, the private lender's decision to delay its results, citing ongoing talks with potential investors, is also intriguing from the regulatory point of view. Sandeep Bhagat, partner at SNR Associates, joins us on the phone line to tell us how the regulators may react to the Yes Bank's decision. Sandeep, good morning. Thanks so much for joining in. Open question: how do you think the regulators' point of view would be out here? And add to that, could there be some relaxations or rules laid down with regards to the pricing at which investors could come in?
Yeah, hi, thanks. I think two things. One is obviously the RBI will come in play if more than 5% is acquired by any individual investor. You'll need prior approval of the RBI. And they'll look and see if it's a fit and proper person, etc. So that's something obviously the company will have to tackle directly with the Reserve Bank. The second issue is really on pricing and SEBI preferential pricing, if these are coming in by subscribing to a fresh issue of shares. I think in there the SEBI requirements are fairly clear, and if there are any exemptions, such as if there's somebody's going as part of a strategic debt restructuring, etc., then there are certain relaxations given in the rules itself. But if they don't meet those particular conditions which are there for a preferential allotment, so there's a scheme approved by a high court, or there's a conversion of a loan, etc., which if this is not one of those, then you need a special relaxation from the SEBI board. Which again, what that means is, is that they'll have to go and seek an exemption from the regulator, and it's not clear to me whether or not the regulator will give any exemption. I think that will have to be discussed. Is there something that special about this case? Why should SEBI give an exemption for them and not for others? That will be the kind of discussions which they'll have to have.
Okay, precedents for the same, Sandeep, and again, I know it's conjecture to figure out what the regulator would do, because there will be many considerations out here, but just wondering, because the feedback that we get when we speak to a lot of capital market participants, the belief at least some of them have, is that pricing may become an issue for Yes Bank.
Yeah, I think, look, the circumstances under which special dispensation is given by SEBI, I don't know what the arguments they will make here, but if there's, if it's a sick company, or if it's not covered under the kind of provisions, but yet is in a kind of a trouble which is so serious that SEBI needs to step in. I think those are the circumstances by which SEBI may look at it and think about giving relief. I don't know if any of that exists right now for Yes Bank. So I think it'll be a hard case to kind of go through, but again, it's between them and the regulator how that works.
Yeah, well, that's true. But thanks so much for giving us this small perspective, Sandeep Bhagat. Really appreciate your time.
Sure. Bye-bye.
Well, 3 minutes away from market open, so let's tell you quickly all that you need to know to stay ahead in trade today. Starting off with earnings, Bpcl, Nestle, Page Industries and Apollo Hospitals are amongst the key companies reporting numbers today.
Amongst earnings that have reported after market hours on Wednesday, Irctc, CPI Industries and Torrent Power reported strong numbers.
On the other hand, Ashok Leyland, Aarti Industries, Dish TV and Natco Pharma reported weak numbers.
Yes Bank has delayed its third quarter results till March 14, says it is engaged in capital raising from four bidders.
No major changes in the MSCI India indices. Chalet Hotels, however, has been deleted from the MSCI India Domestic Small Cap Index.
And lastly, PNC Infratech has been declared an L1 bidder for a HAM project in Uttar Pradesh for a bid cost of about 2,052 crore rupees. The stock's up about 3%. Amit, anything else that you've been tracking for some time now? Probably the trends are changing there, and one should focus on them. One could probably even take positions if need be, not now. All right, I think we've lost Amit's link there. But a quick word, Parthiv, any one stock that you like, from a slightly long-term perspective? And a short answer.
Sure. We are bullish on the chemical theme, and yes, one result, Aarti Industries, which was not up to the mark or up to the expectations, and if at all it corrects, we are very bullish on it, and they're going to get a lot of advantage in terms of whatever has happened in China, and they're getting a lot of inquiries in terms of long-term supply contracts in their benzene derivative related products. They've had a huge capex, and if at all it corrects due to the numbers that is posted, you would be buyers in this theme.
Okay. That's Aarti Industries there. Top calls from our technical experts as well as our derivative expert Amit Gupta. We're about 50 seconds away from market opening. Amit, a quick top call from your side for trade.
So I think we can look at technology stocks, particularly SCL Tech, because if banks are not giving any decisive breakout, I think what is being supportive to Nifty is technology. SCL Tech, I think the open interest has declined by 15%. That is a clear sign that once it has moved above 600, the short covering has already started. My sense is it can move to 645 at least. So look at buying the stock at these levels.
Okay, well, the 5 seconds there for the markets to kickstart trade, and we're likely to start off marginally higher. Surprise, surprise, the rest of the Asian screen isn't. So let's see if we build on from here, or do we cool off, where we are already showing signs of cooling off. So it's a very flat start for our markets, about 9 points higher for the Nifty 50, Sensex just about 33 odd points, and the Nifty Bank, well, very, very flat. So it's hardly any movement on the benchmark indices. In fact, the Nifty Bank just bobbing between the red and the green. What about the mid cap and the small cap indices? They should come up on your screen again. Very, very flat start. So almost nothing in the markets today. Let's see if during the course of the day, do we succumb to some selling pressure, because the world markets certainly have come off after higher cases of coronavirus got reported. Quite unlike the last 2 days, the market starts off even Stevens. Just that there are not enough, there are a number of losers, just that they are not correcting too much. The top loser is UPL, down about 1%. HCL Technologies that Amit Gupta spoke about, 0.8% lower. Britannia 0.8% lower. There is weakness in Jsw Steel, IndianOpen Bank and Britannia. So those are the other three that you need to watch out for in the session today. What is doing well? Yes Bank for now 3.5% higher. Let's see if this lasts. SBI, yesterday it corrected, but today starts off positively, about 1.8% higher. There is strength in Infosys, strength in Dr. Reddy's, and strength in ONGC as well, ever so marginal, but in the green. But clearly the highlight are the two banks, Yes Bank and State Bank of India, to an extent Infosys, and UPL is the top drag, about 1.25% lower. Very quickly, the broader end of the spectrum, just a couple of pockets I want to highlight. Can't not talk about IRCTC. I'll add a PI to that because both of them came out with numbers 8% higher for IRCTC, so not a 15-16%, but still you have to confess a very strong move. And PI Industries about 1% higher, not bad going. What about companies that were trading with decent gains all through, and how are they doing today? So Amrutanjan, yesterday's top gainer on the list of the all-time high stocks, up another 3%. Metropolis 9% up yesterday, just cooling off a little bit today. And Neogen Chemicals, which for the last 4-5 days had a tremendous run, starts off another % higher. Devina, what are you spotting?
First, with some of the other results that got reported. So one, we had Aarti Industries that reported profits marginally higher by about 4% Revenues were down, so disappointing quarter, and the stocks looked weak this morning. Aside from that, Dish TV, Natco Pharma, both of them reporting numbers. Dish TV consolidated revenues were down 42%, and the net loss came at 64 crores. Stocks down about 2.5%. Natco Pharma too saw a dip in profitability, as well as the top line degrew by about 13.5%. So that's down. Torrent Power is the other one where profits were up about 77%. Stocks moved up by about 4.5%. Navkar Corp is up 14% this morning. Avanti Feeds is up 7%, so 643 on Avanti Feeds, doing well. The likes of Suven Life are up in the session by 5%. Pfizer is up 4.5%. Suntech Realty, two reported numbers, 2.5% higher. You've got Timken India, which is up about 2.25%. IOB is up 2%. Lakshmi Vilas Bank keeps moving up. Today again it is up in the session. I think 2% higher for Lakshmi Vilas Bank, 40% in the last 7 days. Jindal Steel Hisar is up about 1.5%. Minda Corp is up 1.5%. So some of these names to watch out for. What's losing is Natco Pharma. We spoke about that. It's down 6%. Wockhardt is down 4%. 2 days in a trot now. Wockhardt has been down, and today is down 4% as well. Network 18 is down 3%, and Deepak Fertilizers, MMTC, Dish TV are all trading under. Breadth of the market is more negative this morning. 579 stocks advance versus 5. I think it's pretty much an even keel actually. No major deviation in terms of advances and declines. It's almost flat, the line. Just a quick opening thoughts, Amit Chauhan, from you, and any one stock that you feel you would like to bet on from a near-term perspective, a top call of sorts.
See, as far as Nifty is concerned, we have seen mild opening, so 12,180, 12,170. This is the level where we'll look to go long with a stop loss around 12,135 and target remains around 12,260. As far as one stock idea is concerned, I'll go with Minda Corp, which has started well above its resistance. So from here on, we expect this move to extend 124, 128. These are our near-term target. Can be bought with a stop loss around 112.
Okay, got that. We leave it at that, Sameet. Thanks very much for joining us.
Thank you.
Well, let's welcome in Saion Mukherjee. He's the head of equity research at Nomura India, joining us right now on the show. Saion, good morning to you. Speaking to you after long. Let's talk about all that's happened in between. We got the budget, we got the RBI policy, we got a trade truce, and then we got coronavirus. Lot of things to digest for the markets. But what's the call from Nomura?
Yeah, I mean, at an index level, we are forecasting around 7% upside from the current level by the end of the year. I think we are forecasting some sort of recovery, a cyclical recovery. So if you look at our portfolio, it's positioned towards that recovery. So yeah, I mean, in the near term, we do see slowdown continuing. Our economics team actually is forecasting that for the December quarter, we may see a growth print which is probably even lower than what we saw the previous quarter. But then we do expect recovery going forward. So that's how our portfolio is largely positioned.
Saion, are there any changes in the weightages or the propellers of growth in terms of industries that you see for the markets, where some additional funds can come in from the FII desk, where there is interest on the back of the fact that there could be a turnaround for those spaces?
Yeah. So, if you see what we have been kind of expecting is a recovery driven by the kind of monetary policy stimulus that we have seen, right? If you look at the entire last 1 year, we have seen 135 basis point cut by the Reserve Bank. We have seen ample liquidity in the system. I mean, proactively, the Reserve Bank has been adding liquidity. It is also supported by foreign flows. And then lately we have seen actions by the RBI with an effort to improve transmission of those rate cuts. So historically, if you see, right, we see a reasonably strong correlation, a lagged correlation between liquidity and industrial growth. As we see things today, there's a complete divergence. You have ample liquidity, but growth is still struggling. So our view is that as we see this transmission happening, we would see gradual recovery taking place. In terms of the sectors that would see, I think it could be across board. To start with, we may see improved traction in consumer discretionary, but over a medium term, given the policy push, I think it would be largely investment led. So you have construction, infrastructure, capital goods. These are the segments from a medium term perspective, like 1 to 2 years is where we see a revival in growth.
Saion, are you, encouraged by the retail participant in the equity market right now? We've been seeing the mutual fund data coming out. There has been a pickup, and the SIP numbers on a month-on-month basis has been going strong. So the retail investor still is, is fully entrenched in the market.
Absolutely. So I think there has been a change, right? So we have seen, of course, the broader market has seen a lot of issues, but at the index level, the returns have been okay. It's not been a disaster, right? And I think there is a fundamental shift in retail participation as you see these sticky numbers. So I think this added to the foreign liquidity, I think augurs well for the market in general. And, from a liquidity standpoint, we remain constructive for this calendar year.
Do you think it's going to be liquidity that's going to drive much of the gains for the rest of the year for our markets as well? Because fundamentals are not changing all that much, even in terms of the kind of earnings performances that we're seeing, barring a few handful of companies which are managing to, surprise positively. So do you see, prices coming off because, or the fact that, people are ready to pay any price right now because of the lack of investment avenues?
Yeah, you're right. So I think earnings have been quite disappointing. I mean, in fact, I would say towards the later half of last calendar year, the intensity of earnings cut increased as the slowdown progressed. What we are expecting is that given the fact the expectations in many pockets are quite low, and as you see cyclical recovery take shape, we would expect earnings to come through. So I think at this point in time, the market's confidence on earnings is low. That's why you see we still have a pocket of stocks where the earnings visibility is relatively high. There is no major capital allocation or governance issues. The multiples are just moving higher and higher. That in our view is likely to change, right? As you see a recovery or get some confidence on growth, and you find earnings visibility high, what we expect is that it would be a broad-based rally where we would expect some of the underperformers, to start performing.
Saion, good morning. Neeraj here. Do any of your large global clients are they getting interested in some of the lesser represented pockets? I mean, asset management companies, back-end manufacturers, specialty chemicals, all of these have now become true blue sectors in the Indian markets, even though the quantum of companies and the liquidity might be in question at times. But are global clients showing interest into any of these smaller pockets?
Yeah, I think, I would say in general, the universe or the number of stocks, let's say the global clients have been looking at has reduced quite a lot. Because, the fact is there are a lot of concerns on the economy, on the macro and earnings visibility. So I think, there are select stocks and select pockets which is getting a lot of interest. And some of the sectors and names that you mentioned, I do see incrementally more interest there. But in general, I would say it's not a very broad-based interest at this point in time.
Okay. One pocket, because you would be looking at some of these companies on a global platform as well, things related to capital markets. Now, 2 or 3 things. There's a bit of a revival in sentiment at the broader end of the spectrum. Also, January saw some substantial equity-linked flows, which people believe could become a trend as well. What about asset managers? What about brokerage names or things related to capital markets? I mean, there are individual names like CDSL, etc. also. So it's a large bucket. What are your thoughts here?
Yeah, I mean, see, if you look at our portfolio, we do not have, in our model portfolio, any of these, segments or names that you mentioned, primarily because, a lot of this has run up quite a lot, right? And, today, I mean, I understand, some of them have structural stories related to inflows. But given where these valuations have moved up, and some of them are also linked to market performances, so we find at this point the risk reward not very favorable. So in our portfolio we are avoiding such names at this point.
Saion, what's your take on healthcare, in totality, be it the pharma end of it, be the diagnostic end of it, be the hospitals business, everything, coming together. Is this a turn of the page for the healthcare space? Because we've seen a lot of interest that's coming into specific pockets, and just the fact that up until now it was not so activated, and suddenly there are green spots all over the place.
Yeah, if you look at the performance in the healthcare space also, it is very much similar to what the general trend is, right? It all comes down to earnings visibility. So if you look at within healthcare, you have diagnostic names which have done very well. You also have pharma companies who are exposed more to the India business, right? Where there is an element of secularity, there is greater visibility, you see the multiples moving higher. At the same time, if you have the the traditional US generics businesses, you haven't seen a great performance there. So ultimately, I think it comes down to visibility of earnings, and which is obviously higher in pockets like diagnostics, hospitals, and India specific pharma companies. So we see that stocks getting re-rated. From our portfolio perspective, actually, we have both US-centric as well as some of these healthcare names which are focused on India, particularly because even after the run-up, if you look at the valuation multiples for some of these names, which are like trading at less than 20 times FY22 PE, would be growing at 15-20%, do not have debt on books, no major governance issues, and if you compare it with some of the other sectors, like for instance in the consumption space, there's still a huge valuation gap. So on a relative basis, pharma valuations are attractive even after the run-up that you have seen in some of these pockets. As far as US linked or US generic exposed companies are concerned, frankly, it's difficult to time them, but I see a good value in those stocks, and therefore we think if we wait out for a year, we should see some traction at some point this calendar year.
Saion, it seems like consumption names, even though we've been talking this entire year, has the undertone has been that consumption is not picking up at the pace it should be. There has been a lack of spending on consumption. Discretionary spends have gone on. But aside from cars and aside from the auto space, almost all of the other names are still trading at heady valuations, and there are still pockets of interest where you've got brokerages coming out and saying that this is not the end of the move, and even if it's this expensive, it probably will get more expensive.
Yeah, I mean, that's been difficult, because I guess obviously the numbers for some of those consumption names have been actually quite okay. Also the fact that going forward, I think there are some green shoots. As I mentioned, like in the discretionary space, we think as the overall broader economy stabilizes and revives, we should see stronger growth there. Even areas like rural, right, which has been quite disappointing in 2019. I think in this year we may see a greater traction. The terms of trade are improving. You see higher prices for agricultural produce, and the cost of inputs have come down, so that's positive for them. So the sowing season looks to be going great. So I think at the margin there are expectations that rural will also start to pick up. So in that context, I think people see stronger earnings visibility, But the question remains how much we want to pay for that, as we are sloshed with liquidity, and that is chasing a handful of stocks where you have earnings visibility, and these multiples keep going higher. So it's very difficult, and fundamentally we find difficult recommending a buy on some of these richly valued names. Though we agree that in the recent past we have been wrong, and these stocks have kept going higher.
Okay. Saion, pleasure chatting with you. It's been long, but look forward to have you more often on our forum. Thanks so much for speaking to us today.
Pleasure. Yeah, thank you very much.
That's the view from Nomura India. Devina, interesting that he's saying that FIs have reduced the quantum of sectors that they were looking at, but portfolio position towards the cyclical recovery going ahead.
Yeah, and it's also interesting because it's pretty split. When you talk to some people, they talk about it being more a company-specific approach rather than a sectoral-specific approach, while the others seem to believe that focus on a sector which is likely to do better, and then companies within the sector which could do even better than that. But we're going to take a very short break. On that note, the Nifty is absolutely flat. In fact, moved into the red. 12 points under for the Nifty 50. Nifty banks losing about 75 points. We're going to be discussing the earnings with Hiranand Savlani of Astro Polytechnic and Manish Gulati of HEG.